Focus. Ideate. Innovate. Enable.
A very good morning and a warm welcome to each and every one of you to CNBC TV 18's Investor Camp in the sparkling and dazzling city of Surat. The last 1 year has seen the markets rise post the election euphoria, and then that enthusiasm is ebbed a bit as the demand recovery is not played out. We saw that in the case of the Q2 earnings as well. So what should you do with your portfolio? Is it time to tweak it? Which are the sectors which are now looking attractive for the longer term? We could get a few Diwali picks as well from our three experts, Mr. Tulsian, Sudarshan Sukhani and Kapil Bali of YES Securities.
I should say that I appreciate this kind of approach and this kind of investing approach where the investors are making money quickly and then, keep reshuffling, because this is the time where you cannot, I'm not saying that I'm not against the long-term investment strategy. There could only be few stocks where you can have a long-term approach, but otherwise, if you keep booking the profits of maybe 10 to 15% on an interval of 1 to 3 months, I think that will be quite rewarding. And this is the state of the market which we have been seeing for maybe last about 18 months, post the new government having come in at the center. Since then, the markets have been giving a good opportunity. So with this background, I have brought some ideas in the small cap. As I said, that people keep asking me. When I was coming to Surat, 4 or 5 people in fact met me and they just asked me when I gave them some big ideas of the large cap. They were more interested in knowing the small cap. I'm not saying that that's a wrong approach, but that is generally the flavor, that is generally the liking of the retail investors. And maybe with that background, I have in fact brought 4 ideas which can necessarily be called as a small cap, because all those 4 companies are having market cap of less than 1,000 crore. And 1,000 crore companies less than market cap of less than 1,000 crore, they necessarily falls in the small cap. But again, all the 4 companies which I have chosen, having very good management, no concern on the management, very growth potential sectors. This may be due to some events, maybe due to some technical issues. The shares are not either what you call come on the radar of the large investors or maybe languishing low. So I'll try to quickly wrap up those 4 stocks. To the investors in Surat, 4 investment ideas have been given from this Diwali to the next Diwali. But all the 4 stocks are largely in the small cap, having market cap of less than 1,000 crore. But if you see the best part about those stocks, that they are seen to be ruling quite low, having good promoters, and majority of them are profit making. Just to quickly recap those 4 stocks, first is Kesoram Industries, a BK Birla Group company, now will be entirely focusing on the cement business. Second is a company, Oricon Enterprise, again Parijat Group company into multi-business like packaging, real estate development and the logistic, which has been the flavor going forward. Third is the company from TVS Group, Harita Sitting, which are providing sitting solutions, having 5 plants across the country, and expected EPS of closer to about 16 to 20 on an annualized basis. And the last stock is Action Construction, which are a leader in the tower and mobile crane segments, making material handling equipments, again a profit-making company. So all those 4 stocks can give a return of anywhere between 50 to 60% if they are all held with a view of about with this Diwali to next Diwali, that is in the next 12 months. In the interim, if the investors wish to book profits, they can always exit on a gain of about 15 to 20% in the interim period. I have in fact tried to pick up all 4 stocks which are not very much in the news or which are not very much talked about. In fact, I wanted to give maybe 6, 7, 8, 10 ideas, but I thought that let me focus on 4, give the financials of the company, give some little background, so the savvy investors, those who just want to understand the fundamental financials, can get attracted and then can take a decision.
4 stocks with a potential return of 50%. Let's see what our other speakers have in store. But right now it's time for a short break. We'll come back with more. Welcome back. You're tuned in to CNBC TV 18's Investor Camp in Surat. We just heard Mr. S.P. Tulsian's Diwali Dhamaka ideas. Now let's hear out what our second speaker, Sudarshan Sukhani, charts as the market technical.
हम आपको है ना हमारी राय देते हैं और honestly and diligently आपके साथ जो भी हम जानते हैं वो सब शेयर करते हैं. So we share that. But eventually your own brain works for you. You cannot blindfoldedly listen to us and then say, this is it. You have to do your own work. And you are Gujaratis, you know that better than I do. But I thought I will still make this point, that in the markets, in everywhere, you have to use your brains, but especially in the markets, no matter how much you listen to other people, you have to judge for yourself, because your portfolio is your own, the money requirements are your own, what is the risk you can take, what kind of family you maintain, what business or profession or job you do. All these things finally affect your decision making. So the decisions must be your own. My presentation is very simple. You people know it here much better than I do, that in the long term, the stock market gives the maximum returns when compared to other investing ideas. That's something we understand. That is why you are here. Because if this market outperforms everything else, then naturally you want to know more about this market as much as you can. You want to add to your knowledge. A track record of the last 150 years tells us that stock markets have outperformed most asset classes, including gold, silver and fixed deposits. If that is so, then investors should stay focused on stocks. However, it's not as simple as that. There are periods in the last 150 years when stocks have done nothing for 10 years or even 15 years. So there are cycles within the overall outperformance. Sometimes stocks do nothing and sometimes they outperform very, very loudly. So our task as investors and traders is to find out where we are currently placed in that cycle. Are we in the underperformance cycle or are we in the outperformance cycle? You must also understand that 130 years was not all golden periods of time. There were many, many periods when the stock markets went through a process of underperformance. Suppose that period is 20 years and suppose you start investing in stocks today. So you can actually spend the next 20 years finding that you are underperforming everything else. Gold has gone up, silver has gone up, real estate has gone up, and the stock market will go up in 130 years, but it doesn't help you. उससे कोई फर्क नहीं पड़ता है. So our task then is to find out what is the current status of the market. Are we in the underperforming zone or are we in the outperforming zone? If we are in the underperforming zone, तो थोड़े बहुत blue chips लेके रख लीजिए. That's all there is to it. And focus on gold, silver, fixed deposit, real estate and everything else. But if we are in the outperforming zone of the stock market, then we should aggressively go and buy shares. It is my belief that we have gone over the underperformance cycle in the stock market. The markets were doing nothing for 15 years. They were in a narrow trading range. In 2013, sensing that Mr. Modi is coming in as Prime Minister, the markets finally broke out of that trading range when they went above 6,400. Since then, we have entered a bull market. Once a bull market starts, it lasts for 15 years, 10 years, even 20 years. So we have just started in the beginning of a long-term bull market. First of all, no matter how confident we are that we are entering a big bull phase in the stock markets, we must diversify our asset base. I always keep on suggesting that you do an SIP in an index fund, a bank index fund and an index fund. Every month you invest X amount of money, whatever you want to, in index funds. They are the cheapest to manage, so your cost in an index fund is very, very small. Put some money in Nifty stocks, your choice. You decide these are the 5-7 Nifty stocks that you think are outperforming, or your advisors think that they are outperforming, or the people you like on TV say that and you agree with their ideas. Invest some money in Nifty stocks. Invest just a little bit of money in mid caps. You must have some gold and silver, but fortunately for us, most of us have gold and silver anyway in the house, and that's enough. Don't make an extra investment of gold, don't make an extra investment of silver, don't make a speculative buy, because I think in the next 10 years, the stock markets will be much higher, gold and silver will be where they are, and real estate will be much, much lower. That's my view.
That was Sudarshan Sukhani. Now let's welcome our third speaker, Mr. Kapil Bali of YES Securities.
Unfortunately, in our country, more number of people don't look at the equity markets than the number of people who look at the equity markets. The ratio is very different, most probably in Gujarat, where the awareness level is very high. But still, I would say, compared to what developed countries we find, the kind of investment in equity market is, we are nowhere close. I'll just give you one small data on this. 47% of US households hold stocks. 47% of US households hold stocks. So almost half of the households in US hold stocks. And now somebody may say that somebody may have only one share or two shares and all. Out of that, above $10,000, it is 31% households. And believe me, even $10,000 is big money even in US. Now, there are a lot of schemes there which help that kind of investment. There is 401k, like that. But even comparing, and somebody may say US is very far off, but the gap is slowly closing very fast. Now, I would like to delve, because we have stocks here, we will always talk about stocks. But on a note, because there are a lot of intermediaries also who have further clients with them, I think we need to address why people are not accessing our equity markets. I know in this hall there are a lot of aware people, but there are lots more who want to enter but have a lot of suspicion about the market. One is quick returns, do kachar, kind of image about our markets is there. There is no harm about image or something, but for the normal customer or the normal consumer or the normal investor, anything which is very quick and fast, there is bound to be suspicion. I think all of our duty is also, if we are talking to maybe less aware people or people who want to first time enter the market, we need to get this right, that there is a catch to it. There are stories where 2 ka 4 is easy, but most of the time there is a percentage return. Chasing multi-baggers is not wrong, but chasing only multi-baggers is wrong. This is for all of us. We get carried away. We only start chasing multi-baggers. We may burn our fingers faster, and then we say, "Arey yaar, isme nuksan hota hai, chhod do," and then we go away from the market. So I think we have to be very prudent about our portfolio. Following here se, kisi ne bol diya, हमने कर दिया. That kind of approach again may not be right.
One of the themes which we feel is a very strong motivator for a new person to come in is how easy or how he should go about reaching out to the market is. And second, which is foremost, is like in other areas or assets, the family contribution has to come in, wherein the whole family gets together to talk about an asset class, and which is where in equities we are still, I think, in the very nascent stage, and we really need to work on that.
There are two ways of investing. There is nothing right or wrong, but the easier way is the long term, because the application of effort is less. On the short term, you have to be more involved in the market. If you have time, please be more involved. If you can read technical charts, you should be. But if you are a first time investor, or you are a long term investor, or an asset class builder, or a portfolio builder, then you need to spend time in the market. There is a huge compounding factor in the market, which starts working for you or us when we start staying in the market. Power of compounding is very important in equity market. It's very important in all other factors also, but in equity market, power of compounding is very much. In fact, you will find investors who have dividend coming out, which take care of when they had bought the stock. So practically from good dividend yield also, you can actually gain your cost.
You just heard our three speakers. We'll slip into a very short break on that note, but we'll come back with our favorite question and answer session. Let's see how Surat grills our experts. You've been watching the CNBC TV 18 Investor Camp in Surat, known for its savvy investors. So here's what we're going to do now. Throw open the floor, and the audience, the savvy investors, can ask our experts their questions.
Morning, sir. This is Pratik. My question is to Mr. Tulsian, sir. Sir, we have seen the FMCG index. From the valuation point of view, if we see, most of the companies are trading at around 40 to 45 times 1 year forward earnings. Whereas the average 10-year period multiples is around 23%. So do you see a bubble is created in the FMCG sector, or people are actually factoring in the GST thing?
I don't think that there is bubble building up, number one. Number two, the kind of example you yourself has given, take for instance in every sector there is a benchmark P multiple. If I say in FMCG, it has to be 15 times, 20 times. Then you add the growth component. Suppose if ITC is growing at 5%, 6%, 20 as the base and 5 is the growth, 25 times will be the multiple. But if Imami is growing at showing a growth of 30% or maybe 15%, 20%, so base plus that 15% element. So historically FMCG and pharma both are enjoying a higher P multiple. Always brand carries a premium, growth has a valuation element into it, and you have a base P multiple assigned higher to the FMCG sector.
सर 2013 से लेकर के अब तक निफ्टी जो 7,000 था वो 9,000 तक आ चुका, सेंसेक्स 21,000 से लेकर के 30,000 तक टच कर चुका। बुल रन मार्केट बोल रहे हैं, लेकिन जो ब्लू चिप शेयरों में इन्वेस्ट करते हैं और उसी में करना चाहिए, वो सारी कंपनियों के शेयर आज भी 10% और 20% के भाव है। तो अच्छे दिन कब आने वाले? मुझे तो सर कुछ लोगों ने बताया था कि अपने बुढ़ापे के लिए अगर सुरक्षित रखना चाहते हो तो शेयर बाजार में इन्वेस्ट कर दो, और 2 साल में ही मैं बूढ़ा लगने लग गया।
स्टॉक पिकिंग इतनी इजी नहीं होती है। जब आप किसी शेयर के पीछे जाते हैं ना, तो आपको उसको एक्टिवली मॉनिटर करना पड़ता है, क्योंकि टेक्नोलॉजी चेंज हो जाती है, इकोनॉमिक स्ट्रक्चर चेंज हो जाता है। कोई जरूरी नहीं है कि आज जो शेयर बहुत बढ़िया है वो 2 साल बाद 5 साल बाद उसी स्थिति में रहेंगे। इसलिए अब फाइनेंशियल टेक्नोलॉजीज में, मेथड्स में जैसे और हम प्रगति कर रहे हैं, एडवांसमेंट्स कर रहे हैं, हमारे पास बहुत तरीके हो गए हैं स्टॉक मार्केट में पार्टिसिपेट करने के लिए। सबसे इजी तरीका है आप इंडेक्स फंड्स को लीजिए। इंडेक्स फंड खरीदने का फायदा ये होता है कि जैसे ही कंपनी की स्थिति डामाडोल थोड़ी भी होती है, वो इंडेक्स से हट जाती है और वहां दूसरी कंपनी आ जाती है। तो जब आप इंडेक्स फंड खरीदते हैं, चाहे निफ्टी या बैंक निफ्टी का, और निफ्टी के इंडेक्स फंड में तो हमेशा टॉप कंपनीज आपके पास रहेंगी। और जब आप इंडिविजुअल शेयर्स खरीदते हैं तो जैसे ही आपको अंदाज लगे यहाँ कुछ गड़बड़ी हो सकती है, यू हैव टू गेट आउट, यू हैव टू बी एन एक्टिव इन्वेस्टर। मैंने आपको बार बार कहा कि अब आप खरीद के भूल नहीं सकते हैं।
We get a lot of queries from Twitter, so let me try getting in one. It's from NSC Protects. I'm 40 years old. Is it too late to invest in SIPs because they say you should start early? Kapil, you want to come in on this?
See, I think even at 40, it's a new 30 only, and I think he still has a long way to go before I think he gives up his daily job or whatever he's doing. And I think SIP is good for everyone, even for very bold investors also, or even for traders also. But on a certain portion of their money, I think they should always go for SIP.
सर, आपने जो SIP इंडेक्स SIP करने के लिए इंडेक्स फंड में, तो आई वुड टॉक अबाउट द फ्यूचर कि अगर मैं आज से स्टार्ट करता हूँ SIP, तो what amount of return I should expect for coming 15 years? आई एम प्लानिंग फॉर माई रिटायरमेंट, तो क्या एक्सपेक्ट कर सकते हैं और कितने टाइम में वो रिव्यू करना चाहिए?
आप जब SIP करते हैं तो आप SIP करते जाइए, रिव्यू करने की जरूरत नहीं है। अगले 10-15 साल तो वैसे भी बुल मार्केट्स रहने चाहिए। और रिटर्न क्या एक्सपेक्ट करेंगे? इट शुड बी बेटर देन बैंक फिक्स्ड डिपॉजिट्स। बट कपिल हैड अ वेरी नाइस प्रेजेंटेशन, मे बी ही कैन टॉक अबाउट द रिटर्न्स।
आई वुड लाइक टू ऐड देयर, आपका क्वेश्चन एक्चुअली दिस इज अ क्वेश्चन विच इज इन लॉट ऑफ पीपल्स माइंड हु वांट टू एंटर द मार्केट. I think we get carried away by target price and percentage, and as Sukhani साहब was saying, if we get above the basic debt, जैसे fixed income का कुछ आपका है, bond वगैरह, FDs वगैरह है, if you can get above say another 2 or 3% above that as a normal investor, so अगर आपको जो भी मिल रहा है अगर 12 से 15% बनता है इस इन्वेस्टमेंट पे over the long run, I think we should be happy because over the long run ये वैसे भी टैक्स लाइट है, and compared to then with the fixed income it will be better. तो उसके ऊपर मिले it is our luck.
मेरा सवाल तुलसियन सर से, इक्विटी में पोर्टफोलियो कैसा होना चाहिए?
देखिए, इक्विटी में पोर्टफोलियो अगर आप एक चीज का प्रॉपर एलोकेशंस को फॉलो कर सकते हैं, जो मैं देखता हूं कि बहुत अनफॉर्चुनेट है, लोग बाग जो है ऐसे शेयर, जैसे मैं आपको क्या उदाहरण दूं, जैसे किसी भी चीज का, तो अगर आप अपने इक्विटी में, मैं सिर्फ इक्विटी की बात कर रहा हूं, आपका कम से कम जो है 40 to 50% जो है लार्ज कैप क्वालिटी स्टॉक्स में होना चाहिए, जहां पे आपकी एक्सपेक्टेशन हो 12 से 15% सालाना। कम से कम 30% का जो इन्वेस्टमेंट अलोकेशन है, 30 से 35%, वो होना चाहिए आपका मिड कैप का, जहां पे आपकी रिटर्न एक्सपेक्टेशन हो 20 से 24%, यानी 40 और 35 हो गया 75, 10% आप कैश के लिए रखिए, जो चाहे ट्रेडिंग हो, F&O हो, आपको जो मनमानी करना हो, क्योंकि अपने को तो अपनी ट्रेडिंग की जो इंस्टिंक्ट है उसको भी सेटिस्फाई करना है, क्योंकि थोड़ा पैसा खोने के लिए वहां पे भी चाहिएगा। F&O में अगर पैसा तोड़ेंगे नहीं तो फिर टैक्स प्लानिंग कैसे होगी? तो 10% उसके लिए रखिए, और 10 से 15% तुलसियान जैसे कोई आके आइडिया दे जाता है, 4 स्टॉक्स दे गए और कोई सुन लिया, या स्मॉल कैप, खैर ऑन द लाइटर साइड स्मॉल कैप्स हो गए, वहां पे आप 30% का रिटर्न एक्सपेक्ट करिए। तो फंड अलोकेशन और रिटर्न एक्सपेक्टेशन जो है क्वालिटी के हिसाब से जानी चाहिए।
That's all the time we have for you of this edition of CNBC TV 18's Investor Camp in Surat. We'll be back. It'll be a brand new city, but till then, watch CNBC TV 18 for more. It's been a great time. We've enjoyed it. The audience has been great. I hope you like the show.
Focus, ideate, innovate, enable.